Mr. Cohen, thank you for coming for this interview.
Thank you for having me.
And this is a man who works and lives in New York, works on Wall Street, and is very steeped in the world of Wall Street, knows what he's talking about. He's written a book, Money and Power, and How Goldman Sachs Came to Rule the World. Extremely well written and readable. Extremely well researched, with more than 100 interviews with the top chairmen and CEOs, six of the top chairmen and living top chairmen and CEOs of Goldman Sachs, plus many of the sort of lower players, but still important people in that world. And it's a very serious book. This is not your Hollywood version of Wall Street. Although there are elements of intrigue that could form a plot for Hollywood, basically you're going to get all of your details and some of the drier stuff that you have to learn to understand what Wall Street does nowadays in the very complicated financial instruments. So what I wanted to ask, it's a rather long book. Up to 600 pages, and enjoyable reading for me, but I was thinking about sort of the average guy who likes to watch, the basketball game on the weekends or whatever. Why would he want to read this very detailed book on Goldman Sachs?
Well, the thing is, if you want to understand the way I think the world today really works, which is the intersection between Washington and Wall Street, and how power flows back and forth between those two, and the way sort of 20th century and early 21st century America evolved in this country, and around the world, and the influence that Wall Street had both on this country and around the world. It's really one of our great success stories, Wall Street. American success stories is Wall Street. We've become sort of the leading maker of and providing access to people with capital all around the world, and this is one of our leading exports. So if you want to truly understand how all that worked, you have to understand Goldman Sachs, because Goldman Sachs has been at the nexus between power in Washington and Wall Street for 100 plus years. The firm's 142 years, giving them the benefit of the doubt. They've been very powerful for around 100 years. And so this tells the story of how they got so powerful and the kind of power that they have and influence that they have, and how this black box that is Goldman Sachs, that for many people is very mysterious and now is sort of the object of so much scorn. And it really sort of peels back the onion on what Wall Street and Goldman Sachs is all about. And I think it's done, I hope it's done in a very sort of readable narrative that will engage readers with characters that sort of come to life as they make their way, through the firm.
Yes, it certainly does, and there's some real highlights with one of the original partners in Goldman Sachs, Sidney Weinberg. I thought was an outstanding portrait of him in the book. Henry Paulson, boy, there's a lot of stuff in there that I'm sure people would be amazed to hear about, the former Treasury Secretary and Chairman. I guess one thing, though, I would say, the book sort of, I don't know whether this is a catchy phrase to try to get people to buy the book or what, but how Goldman Sachs came to rule the world. I'm not really convinced of that thesis after reading the book. What strikes me is the world came to rule Goldman Sachs in a lot of ways, and they almost brought Goldman Sachs down at various times. I think that you mentioned during the panic of 1907, they had troubles. They had serious troubles in the Great Depression. They had their Penn Central bankruptcy to contend with, which almost brought them down, as I understand it. They had serious troubles in 1994 when interest rates went up precipitously. So it seemed to me that once you get into your history of Goldman, you find that Goldman's been batted around the ears, just like the rest of us, by the financial markets and the economy, although they do definitely seem to have landed on their feet better than an awful lot of the rest of us and most other Wall Street firms. So perhaps that's what you mean. But I wasn't sure, I wasn't convinced that you believe Goldman Sachs rules the world. I mean, I think you must, I sense that you realize that there's weakness there too.
Well, first of all, subtitles of books are created for many different reasons. It is catchy, and I think there is certainly a narrative in there about how, certainly Goldman Sachs has had the reputation of being very powerful and the envy of every other firm on Wall Street. I worked on Wall Street for 17 years, and no matter which firm I worked at, we all envied Goldman Sachs. We wanted to be like Goldman Sachs, even though I worked at a bunch of different firms, some of which were like Goldman, some of which were not like Goldman. They all wanted to be like Goldman because they make so much money. They have this history of people who, their alumni, getting important positions in Washington. You mentioned Bob Rubin and Hank Paulson, just two recent examples. There's many others which I describe in the book. And so even in this financial crisis that we've just come through, the 2007, 2008 crisis, Goldman was able to see trouble coming, unlike every other firm on Wall Street, and do something about it. They made a big bet against the mortgage market that paid off in terms of billions of dollars for Goldman that every other firm did not see and just pretended didn't exist and basically all went down the tubes. But I think what you do get out of this story is how often Goldman found itself in trouble and how skilled it was of getting out of trouble. And so that was probably, don't forget, Wall Street has always been a dangerous place. Firms have been going in and out of business their whole, for the history of Wall Street. Most firms don't make it. And most firms before 1970, when they started going public and becoming public companies, were small private partnerships that had limited amounts of capital that they got from their partners. And if something happened, their partners were the ones that suffered the losses, up into including their entire net worth. So when somebody goofed, there was always a danger on Wall Street that the firm would go out of business. And so what I show in the first part of the book is how often Goldman Sachs found itself in trouble and how existential that threat was and how close it came to going out of business. So I think you certainly would be hard-pressed to argue that there's another firm that is as powerful on Wall Street now as Goldman Sachs, even with all of its troubles, even with the hearing from the Levin Committee last April, the SEC lawsuit, even really with Senator Levin's report, which came out last week, which apparently has referred to the Justice Department a number of Goldman executives for prosecution, for perjury. Even with all of that, Goldman is still, I think, the envy of the few remaining firms that exist on Wall Street, and really other financial institutions around the world still envy and admire Goldman Sachs. And I think that how they got to be in that position, despite all of their existential threats along the way, is really the story of the book. And so while they don't start off ruling the world, I think it's pretty safe to say that even despite the slings and arrows they've suffered and looking like Saint Sebastian at the moment, they have really risen to remain at the top of Wall Street. And so they rule sort of the world of Wall Street. And how they got to that position is really what this book is all about.
Okay, well, that's very convincing, and I can definitely see that. I guess what I was thinking when you talk about ruling the world is more like political power, and there has been an element of that with Goldman because of particularly the very influential Treasury secretaries of the last couple decades. And
well, even as you mentioned, Sidney Weinberg, who famously, as I wrote in the book, took the subway uptown one day from Wall Street to Midtown for a meeting to decide who should be Eisenhower's Treasury Secretary. He came up with a name on the subway that Eisenhower hadn't even heard of, told Eisenhower. Eisenhower said, all right, Sidney, if you say yes, okay, we'll do it. And that was the guy who became the Treasury Secretary. So they've been behind the scenes very powerful for a long time. I think, ironically, as a result of, Paulson being the Treasury Secretary and all the trouble that Goldman has found itself in, politically and from a public relations point of view, it's unlikely that the current CEO of Goldman Sachs, Lloyd Blankfein, is going to get the call from President Obama to be the Treasury Secretary. So they've had an incredible amount of power on Wall Street and in Washington, and in, frankly, the rest of the world, and governments around the world, for about 100 years. And as a result of this crisis, I think maybe the spigot has been turned off a little bit, although they still have the head of the Commodities Future Trading Commission was a former Goldman partner, and a Deputy Secretary of State is a former Goldman partner. The head of the World Bank is a former Goldman partner, and the head of the guy who's about to, Mario Draghi, who's considered to be the leading candidate to take over the European Union, is also a former Goldman partner. So they're around. Don't
They seem to be everywhere, don't they?
Don't fall asleep at the switch here. It's just that the chances of them being Treasury Secretary anytime soon is unlikely.
Well, one of the things that you point out in your book, and it doesn't seem to be as much the case with other Wall Street firms, although you're a better judge of that, is how the Goldman people seem interested in politics, interested in getting involved, because that isn't always the case with, wealthy individuals. So many of them want to stay away from Washington, where the taxes and the regulation get made, and so what is the... I gathered when I was reading the book that was Sidney Weinberg essentially started that tradition of the interest. He took an intense interest in political affairs. It seems he was also tended to be more of a Democrat than a Republican, although he worked, as you mentioned, with Eisenhower and other Republicans.
After a while, he became sort of ecumenical. If there was a chance to be close to the president, he didn't really care what political party the president had. And he advised every president from Roosevelt, who he had known when he was governor of New York, to Johnson, until Sidney Weinberg died. But, there are a couple of things going on here. First of all, Wall Street executives, that's one of the nice sort of reasons I like the title of the book, is because once people on Wall Street have money, then they tend to want power. And there's been a long tradition of Wall Street executives going to Washington, and not just to Goldman Sachs. So people with names like Dillon and Harriman and Bush have been going from Wall Street to Washington for a long time. At Goldman Sachs, there's a slightly different twist on it, and why it's been more prevalent with them. First of all, you're right, Sidney Weinberg had this long history of being advising presidents and then taking leaves of absence from Goldman Sachs during World War II to lead up the War Powers Board and be a very important person in sort of taking the U.S.'s industrial power and turning it towards the war effort and finding people to fill those jobs. He became known as the body snatcher because he would go to all his clients and insist that they come to Washington to help with the war effort. So that had been going on a long time. Even before Sidney Weinberg, though, Henry Goldman, who was the son of Marcus Goldman, the founder of the firm, had a very important and prominent role in the creation of the Federal Reserve System, the Federal Reserve banking system. When after the Panic of 1907, they decided to create the Federal Reserve System, the couple of cabinet secretaries came up to New York to interview Henry Goldman to get his intake on his input on what the Federal Reserve System should look like. And I felt like in reading the transcripts of those hearings that it could have been, Lloyd Blankfein talking to Henry Paulson as opposed to Henry Goldman talking to two cabinet secretaries, in the early 1900s. His prescription for what the New York Federal Reserve should look like, which was be the most powerful member of the Federal Reserve banking system, as well as how banks were to get access to the Federal Reserve Bank if they needed funds, if they were in a crisis situation, was played out exactly 100 years later. And Goldman was a beneficiary of that. Goldman Sachs was. So it was eerie how long Goldman has had an influence in Washington and where this all began. It really began with Henry Goldman. But then, after Sidney Weinberg, basically every leader of the firm was either interested in politics or came to Washington. And part of the reason is because Goldman has now, especially, very much an up-and-out mentality. Once you have made your pile of cash at Goldman Sachs as a partner, they sort of force you out, which is very interesting. Other firms, they're not set up like that. When I worked at Lazard Frères, for instance, people like Felix Rohatyn and Steve Ratner wanted to be Treasury Secretary. They never got there, but Felix ended up being ambassador to France, and Steve Ratner was the car czar. But there was this mentality that yes, public service was important, but until we get sort of tapped on the shoulder for the right job, we don't want to leave all the millions that we'd have to give up being at Lazard. But at Goldman, they force people out. So you get your time in the sun, you make your pile, and then you get shown the door, more or less. Either you're made into a limited partner or actually, relieved of your duties. And so a lot of people who are quite young and energetic, maybe in their late 40s, early 50s, want to, quote, give something back. So what better way to do that than to come to Washington, especially if President Clinton or President Bush is going to tap you on the shoulder and say, will you be my Treasury Secretary? So that, there's a long tradition of that at Goldman, and again, unfortunately, I think there's now a chill of having people of Goldman coming to Washington because of all the political hay that was made, in the last few years.
Well, that's a very good point. I mean, I think most people, if they look at the history, would conclude that Washington has benefited a great deal from Goldman's expertise in these financial matters and helping to structure the regulations and the various institutions that prop up the Wall Street and the banking industry, the Fed and the SEC, and so on.
They've had a very big role. I mean, all Wall Street firms. I mean, this is sort of ironic. I mean, you're seeing it again in the wake of Dodd-Frank. I mean, Wall Street has always had a big role and a big influence in setting up the agencies that are responsible for regulating it. It's a symbiotic relationship. Some people call it a revolving door. Often people go from the SEC to Wall Street, or Wall Street to the SEC, or
particularly the New York Fed and
to the New York. I mean, the head of the New York Fed now is a former Goldman
Yes.
partner. So, but one thing, everybody thinks that Tim Geithner, who went from the New York Fed to the Treasury Secretary, worked at Goldman, but he never did. He was sort of an acolyte of Bob Rubin and Larry Summers, and so he sort of gets swept up into that. But it's, that's why Wall Street and the Goldman has always played so close to the edge. They know exactly what the regulations are. They know exactly where the lines are drawn. Most of the time they stay just on the other side of it. Sometimes they cross that line and get into trouble.
Yeah.
But, this has been going on, for a very long time. And Goldman is just, because they hire so many lawyers, they have so many lobbyists, they are just expert players in this particular activity. And we can't pretend that it's not the case. Even the regulations that still need to be written with Dodd-Frank are being heavily influenced. While we're sitting here having this conversation, down the street over at the SEC, the Goldman lobbyists and Morgan Stanley lobbyists are sitting there right now with the SEC regulators to try to figure out what the new regulations governing Wall Street should be all about.
Yes, it seems like Washington has suffered increasingly from not having the expertise on these very complicated financial products that the people on Wall Street do. So the regulators often are beholden, essentially, to the banks to explain and essentially help regulate these instruments. So there's a big discussion going on now about at the Commodity Futures Commission over various kinds of derivative instruments that were used and kind of central in the financial crisis that we just went through. And clearly Wall Street's going to have a big say in what happens there. It's interesting that you mentioned the nexus, which is really the critical issue with Goldman, the nexus between Washington and Wall Street. And they seem to have mastered, the art of going between the two and making the maximum sort of profit from being able to maneuver in both worlds of Washington and Wall Street. But I was a little disappointed that there wasn't more of the sort of behind-the-scenes juicy stuff about what went in. Although I will say that there was a scene which you recount about how Rubin who eventually became President Clinton's Treasury Secretary, essentially interviewed Clinton when he was still just governor of Arkansas and considering a run for president, and essentially sort of endorsed him, so almost like he was selecting Clinton as the potential candidate. Is that something that you can talk about a little bit more?
Well, I mean, we've evolved. First of all, to your point about sort of why not more behind the scenes political stuff. You know, I want to be clear. This is a book about Goldman Sachs. So once they, the player involved, say Bob Rubin, did interview Clinton down in Little Rock, sort of blessed him and had fundraisers for him and things like that. Once Bob Rubin left the stage of Goldman Sachs and became head of the National Economic Council in January of 1993, basically that was the end of Bob Rubin in my book. So, because I had to keep going on, my narrative focus was who was left behind at Goldman and what they did, how they had to sort of clean up the mess that Bob Rubin had left behind. And that became the story of what happened in 93 and 94 at the firm when they almost went out of business. But so I try to tell a few vignettes about what got people like Bob Rubin or John Whitehead or Steve Friedman or Hank Paulson interested in politics, and why, when they got the call, I tell a great story about how, Steve Friedman, who was Bob Rubin's co-senior partner at Goldman Sachs, and then was left alone by Rubin when Rubin went to Washington, and then 8 years later, ironically, Steve Friedman got offered the same job in the White House that Bob Rubin had at the National Economic Council, and how Bush calls him up and insists that he come do this job, and he tells Bush, look, I've got a heart arrhythmia, I've got physical ailments, don't know that I can do this, that kind of pressure is not going to be good for me physically. And Bush says, hey, Steve, my father had a heart arrhythmia. President Bush, the first President Bush, he was in World War II. You can come and have with your heart arrhythmia and come and work in the White House. And what could he say? And that's exactly what he did. So yes, I mean, a whole nother book could have been written and probably has been written about vignettes of what Rubin did in Washington or Friedman did in Washington or Paulson. Paulson's own book gets into that. I wanted to stick to, as you point out, this is a long enough book as it is. Yes. If I had delved into, policies that Rubin had pursued in Washington that may or may not have benefited Goldman Sachs or Paulson, people have already written the story of what Paulson did, in the Treasury during the bailout and what he may or may not have benefited Goldman Sachs. I was mostly interested in how these guys would evolve in their positions at Goldman Sachs to the point where they were willing to leave what has got to be seen as like the holy grail on Wall Street, being head of Goldman Sachs, and were willing to leave to go to Washington. And yes, it is, we've evolved to such an interesting point in early 21st century America where people like Bill Clinton, before they could be considered legitimate, serious candidates, had to get the approval of people like Bob Rubin. So the people who run Wall Street are sort of anoint these candidates. I assure you, nobody's going to take Donald Trump seriously for a while as a presidential candidate, if they ever do, until people on Wall Street start taking him seriously too. And I don't see that happening anytime soon. So that might doom, maybe Donald Trump would be doomed anyway, given his silly candidacy, if even it is one. But we've just come to an intersection at this point in the early 21st century America where Wall Street has a huge influence on who becomes President of the United States.
Is that just strictly because of the money that they have, to finance the campaigns, or what? How would you, what would you ascribe that to?
Well, part of it is, you cannot have capitalism, as basically everyone practices it around the world, without capital. And Wall Street is the capital cartel. I mean, the Wall Street firms, the few Wall Street firms that are left, control capital and the capital flows in much the same way OPEC controls the flow of oil. There's not a whole lot of difference. So, the engine of capitalism is Wall Street. The left ventricle of capitalism is Wall Street. So that's why both the end of the Bush administration and the beginning of the Obama administration were so focused on reestablishing the status quo on Wall Street in the wake of this crisis. I mean, another government might have taken the whole approach that, Wall Street is bankrupt, the whole Wall Street system is corrupt. Let's just junk it. Let's just let it collapse of its own weight, and something else will evolve out of the ashes of that, like a phoenix will rise up. But that's not the approach they took. I thought maybe that might happen. I mean, maybe that was naive.
There
but
seemed to be a lot of public sentiment to do that, didn't there?
It was seemed like it could happen. And don't forget, when first Paulson asked for the TARP to be approved, Congress voted it down. Market fell 700 points at the end of September, and then it wasn't until the beginning of October 2008 that the second TARP plan got proposed and got approved. There was a moment there where it really could have gone a different direction. But it's so powerful and so important to the way our country functions, and the way hopefully jobs are created and capital gets allocated, and without the proper allocation of capital from savers to investors, you can't have new plant and equipment, you can't have new businesses grow and prosper. So since that is the engine room of capitalism, you've got to restore it, and that's what they chose to do.
Well, that's a very eloquent statement of exactly what happened over the last several years, which continues to reverberate and be an issue politically.
Absolutely.
And there were
because Main Street has been basically kept out of the fun of reestablishing the status quo on Wall Street. And in the last year, I note with interest that $150 billion of bonuses were paid out to Wall Street in 2010. Main Street is correct in saying, hey, what about us? I mean, we bailed out Wall Street. They're now getting the benefit of that bailout in their pocketbooks, and Main Street is still hurting. It's a serious problem, and that's why, frankly, if you're going back to your first question, why I think, people do need to read this book, even though, some of the concepts are complicated, although I'm very careful to try to explain them when they do get a little complicated. But the narrative of understanding, what is this firm? What's it all about? Why are they so powerful? Why are they worth saving when people on Main Street are sort of not worth saving? I mean, what's going on there? Why have these guys gotten, all the cake and I just get the crumbs? It was a mystery to me that I wanted to try to solve. Just like in the last book about Bear Stearns' House of Cards, it was a mystery to me how Bear Stearns could have collapsed that I wanted so quickly that I wanted to try to understand, and that's why I wrote that book. Here I wanted to understand, why is it that Goldman Sachs gets the benefit of this bailout? How were they able to see around the corner and bet against the mortgage market and benefit themselves, perhaps at the expense of their clients? And what about Main Street? What's happened to everybody on Main Street in the wake of all of this? And why have these guys been anointed while everybody else apparently still has to suffer?
Well, that's a interesting point, because I think if you do read the book, you may still kind of question that, in the sense that I think, as you're saying, people realize that you can't do without Wall Street or something like that, but
you have to be able to allocate capital around the world when it's needed, especially in a capitalistic system. I mean, basically, sort of central allocation of capital is clearly discredited in this country, but basically around the world, capitalism as a concept has taken root, around the world, and very successfully.
So this is really gets to the core of one of our most sensitive and important political issues in this decade, of the nexus between Washington and Wall Street. We're going to be taking a break right now, and we'll get back to some of the particulars in the book afterwards.
Thank you.
So Goldman Sachs, without question, remains one of the most powerful investment banks in the world. Other investment banks may also claim the title, and one of those is J.P. Morgan, which really remains a powerhouse. I believe that was J.P. Morgan was the one bank that was singled out as the not needing a bailout, perhaps. I believe it was Bernanke who said, Fed Chairman Bernanke, that even Goldman Sachs would have gone down the drain without the bailout in the fall of 2008. And there was only one bank that probably could have survived on its own, I believe he was referring to J.P. Morgan. Can you talk a little bit about that? Because we don't want to create the impression that Goldman Sachs is the only one with power and influence.
Well, clearly, folks at J.P. Morgan Chase would argue that they are as strong, if not stronger, than Goldman Sachs. I think you need to make a distinction, if I can. J.P. Morgan is a depository institution. It's a commercial bank with a large investment banking component to it. It's a bank holding company. Before March of 2008, when the Fed and the Treasury decided to step in and save Bear Stearns, the government had never bothered to come in and try to save a securities firm as opposed to a bank holding company or a commercial bank. Securities firms don't have depositors who can go to the ATM. There's no Goldman Sachs ATM. There was no Bear Stearns ATM. They finance themselves in the public markets or by various other means of borrowing money from banks or insurance companies. And then they took that money and they invested it, or they made proprietary trades, or they used it to underwrite securities, or whatever they did. They used that capital. Until March of 2008, no securities firm had ever been rescued. The Treasury made the decision in March of 2008 to save Bear Stearns. You can debate that decision all along. I think probably now that was a mistake, even though I can understand why the decision was made at the time. So basically, what came out of this crisis, though,
and it was J.P. Morgan that stepped forward and...
Well, yeah, the Bernanke and Paulson and Geithner, encouraged J.P. Morgan Chase to buy Bear Stearns at a rock bottom price. That deal actually fell apart until the Fed stepped in to buy $30 billion of the assets that J.P. Morgan Chase didn't want. So there's no question the Fed facilitated that. They had their good reasons for that. I suppose that was something that they thought they needed to do to try to, put their finger in the dike of what was about to be a tsunami, and that worked, for a little while until we got to September of 2008, when basically, the water crashed over the walls, and it was clear at September of 2008, i.e., 6 months later, that the whole structure of Wall Street, i.e., securities firms that finance themselves in the short-term markets and then lend long, borrow short and lend long, that whole model was bankrupt. That whole model was no longer functioning. It is one of those things that is sort of like a light switch. It worked for a long time, and you flip the switch, and basically it stopped working. Now, that's a matter of confidence. That's a matter of counterparties wanting to do business with these firms. It's a matter of credit quality. Basically, the whole thing fell apart. On September 22nd, 2008, Goldman Sachs and Morgan Stanley were allowed to become bank holding companies by the Fed, making them very much like the J.P. Morgan Chases of the world, the Wells Fargos, the Bank of Americas. Interestingly, they did not allow Lehman Brothers to become a bank holding company. Lehman Brothers had asked to do that. They denied that opportunity for them, just like the Fed had denied Bear Stearns access to the Fed window in March of 2008, in the beginning of 2008, when they asked for that, and they made that ability allowed securities firms to hit the Fed window the same day that Bear Stearns was allowed to fail. So the Fed was making very important decisions along the way to who to save and who not to save. But for J.P. Morgan Chase was a totally different, funded itself in a totally different way than Goldman Sachs and Morgan Stanley. Now they fund themselves in a similar way, although not only does J.P. Morgan Chase have access to the Fed window, but it also has its depositors, money that it uses, that basically it gets for free, because we all know what the interest rate is on our savings accounts or our checking accounts, virtually nothing. So they get that money for free, and then they can lend that out for higher interest rates. So they're just playing an arbitrage game. So yes, J.P. Morgan Chase was probably the only institution that was strong enough to have weathered this crisis. They had done a few things right. They basically got out of the business of underwriting mortgage-backed securities sooner than others, but they had a lot of risk in their balance sheet, but they had a very different funding model, so they weren't nearly as susceptible to the whims of the overnight financing market as Goldman Sachs and Morgan Stanley and Lehman Brothers and Merrill Lynch, which had a different funding model. Now it's all the same. So, I think that you also have to look at the fact that, J.P. Morgan Chase is a mongrel firm. It's been, I don't know how many, I've lost count of the number of mergers, but 10 or 15 or 20 mergers over the years. I mean, the old J.P. Morgan and Company looked a lot like Goldman Sachs did, in its day. I mean, he was incredibly powerful as a banker. After the panic of 1907, he alone he provided the role of, like the Fed did in long-term capital management, or even during this crisis, when they brought the Wall Street elders together and decided to put together a rescue package. J.P. Morgan, the man, did that himself. But we've come a long way from J.P. Morgan, the man, and his eponymous, firm that was named after him to what we have today. It's a very different institution. Yes, they're very powerful, but they do business in a different way. Goldman has basically stayed, pure. They've made a few small mergers over the years and one large one that didn't work out, but they basically have avoided, even though during the crisis, the Fed was trying to get Goldman to merge with Wachovia or Citigroup or Merrill or whoever it was. They resisted that, and they stuck to their knitting. And I think that as a result of that, they are still very strong, as is J.P. Morgan. They're both very strong, but I still think Goldman is more envied, feared, admired, whatever one of those words you want to use, in ways that J.P. Morgan Chase is not. And I know I worked at J.P. Morgan Chase, so I'm familiar with that firm. And Goldman still has a certain cachet that they don't.
Well, your book certainly explains very well the very disciplined model that Goldman follows in recruiting and hiring the best of the class in Harvard Business School and other top schools. And I guess one of your points is that this type, it's really a meritocracy.
Very much so.
And this is a society where we reward meritocracies, but we also envy the ones that succeed so well, like Goldman, and that seems to be in play today too. So your book discusses the sort of Goldman type, and I saw various types. One is just your young, brilliant Harvard Business School graduate who may be like a math PhD or something and can do these complicated securities. But there was also the type of Sidney Weinberg, who actually had a very different background, and I thought you might want to get into that.
Sure. I mean, unlike, I worked at Lazard for 6 years, which, was sort of an elite, now it's public, but for a long time a private partnership. And I would walk around the corridors and wonder how I got there. And because, next to me were sons and daughters of presidents of France and sons and daughters of CEOs of publicly traded companies, and, and me, a kid from Worcester, Massachusetts. So that was a firm where you expected to see pedigreed individuals. Goldman Sachs truly was, and not that they weren't smart, because they were, and they recruited very smart people at Lazard too. But at Goldman, it's something else. It's this notion of being team players, being academically gifted, being achievement oriented, having achieved greatness at every step of the way, and also being team-oriented. So, somehow your ego stayed in check while, enough to help the team. So they love athletes at Goldman, and they love people who are hungry to succeed. And so that was, very much in the mold of Sidney Weinberg, whose father was a bootlegger in Brooklyn. I think he was one of 11 or 13 kids. And basically, after his 8th grade schooling ended at a public school in Brooklyn, he sort of decided he had to get a job and made his way to Wall Street, made his way to the tallest building on Wall Street, which happened at that time to be 30 Pine Street, which is where Goldman was, took the elevator to the top, and then went to each business on each floor until somebody agreed to hire him. He got to like the third floor, which is where Goldman was, and he got hired to, I think, clean the spittoons and be an errand boy. And this was when, basically after he was an eighth grader, and he over time, was a man of I think great character and living by his wits, and figured out a way to impress the named partners of the firm, the Goldmans and the Sachses. I think he sort of got his big break when one of the Sachs brothers asked him to take a flagpole from Lower Manhattan to his home in by the Polo Grounds, way uptown in the 130th Street or something. And somehow Sidney Weinberg, who was a very elf-like character, a very short fellow, brought this flagpole up to the senior partner's house, and they got to talking, and that led him to get a real job at Goldman Sachs. And that sort of became part of the mythology of the firm, that they hire people like this. And frankly,
people who pull themselves up by their bootstraps.
By their bootstraps. Yeah. I mean, look at and it's not just to some degree it's a myth, because there are plenty of people there. I mean, Lloyd Blankfein, the CEO's sons both work at Goldman, and Lloyd had to pull himself up by his bootstraps, but not his kids. There are plenty of people there who have privileged backgrounds, but even the people who make it to the top. Look at Lloyd Blankfein. I mean, he grew up in the South Bronx. He moved to the East New York part of Brooklyn, which is not the greatest part of town, for a better life. His father was a postman. Lloyd told me, I thought this was fascinating, that his father was then, after he retired, was replaced by a machine. So, the job that his father was doing was outmoded, and a machine could do it better. And his mother worked in an alarm security company, which he described to me as a growth industry in that part of Brooklyn. And he went to public high school, and where Harvard happened to recruit, found him. He was clearly one of the smartest kids in the class, and gave him a full scholarship to go to Harvard, where he found himself surrounded by like prep school students, and he didn't feel like he fit in, but he eventually did well at Harvard, then went to Harvard Law School, and then, as he said, I went from being an underprivileged child to a child of privilege, because he had access to Harvard and Harvard Law School. And, this is very much the kind of person that makes it to the top at Goldman Sachs. I mean, Henry Paulson grew up on a farm, 40 miles outside of Chicago, and his grandfather had been a leading watchmaker and businessman in Chicago, but those businesses failed during the Depression, and his father was basically a farmer. And John Corzine, who also ran Goldman for a period of time, grew up on a farm in southern Illinois. And this is the kind of person that makes it to the top there. I mean, we're not talking about sons, or rarely, I mean, daughters, unfortunately, don't seem to have much place at Goldman, but these are not the sons of privilege. This is not primogeniture here. This is real meritocracy, and it's an impressive collection of people. Honestly, in reporting this book and interviewing these people, they exhausted me. I mean, spending 3 hours with Henry Paulson can be exhausting, because he's so much energy, even though, he came across, when he was Treasury Secretary, as somewhat inarticulate, and people have remarked on that. I found him extremely articulate and extremely energetic and charming, incredibly charming. And so, 3 hours later, with an alpha male like Hank Paulson, I was exhausted. I needed a break.
I was going to ask you about Hank Paulson, because that was one, the portrait of Henry Paulson that comes out in this book is one of the really, to me, revelatory parts of it. Because you show how he started out as such a straight arrow, and was raised up into the management because he had honesty, forthrightness. He established good relationships with people. He was a relationship banker.
He was not going to embarrass the firm, as some other partners had been doing at about the time that Hank Paulson was elevated to the management of the firm.
But maybe I misread it, but I perceived him as ending up as kind of a Machiavellian figure who ended up edging out his co-chairman, John Corzine, and some other people in the
That's
firm
true.
that he pushed out, and almost like a backstabber in that regard. That seems surprising to me, and he comes across as an extremely forceful person, which is particularly interesting for those of us in Washington who saw him as Treasury Secretary and the key role that he played throughout the financial crisis. Can you talk a little bit more about this and, the way he pushed out Corzine, who was also a figure here in Washington,
Um, I mean,
former senator
former
from.
senator from New Jersey and governor of New Jersey. Again, you're right. I mean, this was a revelation to me because my image of Hank Paulson was the one we all saw on TV during the crisis, the one who got down on bended knee to ask Nancy Pelosi for, $700 billion, which was plenty audacious, you have to admit. But I found somebody who was, as I said, extremely charming, articulate, a man of high integrity. Now, nevertheless, and all that can be true at the same time that he was quite ruthless about making sure that, I mean, he would say, of course, that he did it in the interest of what he thought was best for Goldman Sachs. In other words, the reason John Corzine had to be pushed out of Goldman Sachs was because Hank Paulson and others thought that, but particularly Hank Paulson, thought that Corzine was leading the firm in the wrong direction. I tell the story in the book about how Corzine was eager to do these mergers first with Salomon Brothers, then with Travelers, J.P. Morgan, and the one that ultimately tripped him up is when he started merger discussions with Mellon Bank, which frankly may have been a very good fit for Goldman, but basically his other partners didn't want him to do that, and he didn't inform them. And so Paulson and others thought that Corzine was just leading the firm in the wrong direction. So then, I'm sure he would say, in all humility, I mean, I was just doing what my partners wanted me to do or what I thought was the best for Goldman Sachs. But it does come off very Machiavellian, and he basically he completely kneecapped John Corzine. John Corzine never saw it coming, and before he knew it, right on the precipice of the IPO in the spring of 1999, Corzine was out. And Paulson had made alliances with other people in the management team to become CEO and take the firm public. And he, ironically, the two guys he told who became his allies, yes. John Thain, who later became CEO of Merrill Lynch and is now the CEO of CIT, and John Thornton, who's now the head of the Brookings Institute. These two guys formed an alliance with Paulson, and with the understanding that Paulson was going to be the CEO for a couple of years and then leave and turn it over to these two guys. Well, Hank, being Hank, sort of liked the job too much. I mean, he was having a great time being CEO of Goldman Sachs. Frankly, who can blame him? I mean, being CEO of a public Goldman Sachs seems like one of the greatest jobs in the world, especially when you're not the target of so much ire, public ire, as Lloyd Blankfein is at the moment. But, Hank had the board of directors in his pocket, and they kept wanting him, or so he says, to, continue to lead the firm. So basically, Hank didn't want to leave, and that made Thain and Thornton expendable, and he pushed them out too. Yes. And you'd sort of take that in toto, and it does look very Machiavellian. And so, on the one hand, you've got this guy who's very charming and personable and down to earth and makes plenty of time, for people like me, which I appreciated. On the other hand, you just look at what he did and you say, this guy does what has to be done, even if he thinks it's in the best interest of Goldman Sachs to do that. Now, the reason he pushed Thain and Thornton aside ultimately is because he saw this guy, Lloyd Blankfein. He saw the direction that the business was going and the way that Goldman could make most money, which was in the proprietary trading business, and he knew that Thain and Thornton didn't have those skills. So they became expendable, and he saw Lloyd Blankfein, who did. He plucked him up out of the masses and made him the next leader of the firm. And when he went to Washington as Treasury Secretary, it was obvious that Blankfein was going to get the job. So, again, it looks very ruthless and Machiavellian. Paulson would say, hey, I did what was in the best interest of Goldman Sachs. You know what? And it's hard to debate that, because if Lloyd Blankfein hadn't been the CEO of Goldman Sachs during this crisis, Goldman may have gone down the tubes just like everybody else. And instead, it put on this big short and made this big short against the mortgage market. and did things to save itself, which now don't look so great either, but at least they can make a credible argument that they didn't need the bailout, which is something they've done. I think they probably would have gone down the tubes in the tsunami just like everybody else. But clearly Goldman was the only firm on Wall Street to see the problem coming in the mortgage market and doing something about it. And we now know that they did other things they shouldn't have done, which was to continue to sell mortgage-backed securities at the same time they had made a proprietary bet against the mortgage market. And basically their clients suffered, I think, financially as a result of Goldman's decisions.
Well, this is an issue that you bring to the forefront and explain very well in the book, how Wall Street came to become a firm like Goldman Sachs, which started out in the world providing services to clients, helping with mergers, helping to issue first stock issues, helping to arrange loans and bond issues and so on for corporations, helping
really valuable
individuals,
service
a valuable
for their clients.
service. And then somehow, somewhere in the, 60s, 70s, 80s, this other function appeared on the scene and has now, looks like, outgrown the original service model.
To put it mildly, yes.
Which is that these companies are now in the business of just making money for themselves. They call it proprietary trading, and it's the reason that Goldman Sachs can offer billions of bonuses and so on for their partners and their employees each year. And so essentially they've become their own clients, and they're in the business of making money for themselves and getting extremely rich. And this puts them at odds with their clients from time to time, which is, as you say, the issue that became problematic for Goldman Sachs in this whole crisis, but I guess is an issue for virtually all the Wall Street firms now.
Well, again, it's important to make a distinction. I mean, Goldman has really pushed this to the edge, this behavior. Lazard, for instance, where I worked and is now a public company, they just provide M&A advice and investment management advice. They don't have any trading. They don't make any proprietary bets. Greenhill, same thing. Evercore, basically the same thing. So there are other models out there, and there are those people, as getting back to what we were talking about before, had that old model, that sort of securities firm model of the Goldman, Lehman, Merrill, Bear Stearns, where they were taking big risks with their balance sheet, leveraging them way up, and when it all collapsed, caused us to have to bail them out. There are many people who thought that whole business models had just gone down the tubes instead of being reestablished, which is what the government ended up doing. And it would have been firms like Lazard and Greenhill and Evercore that would have come up out of that, providing services once again to their clients without this whole trading side of the balance sheet, and which got everybody into so much trouble. And so, Goldman pushed, as I say, this whole proprietary trading business, this whole trading enterprise, making markets for their clients, as Lloyd Blankfein tried to explain to Senator Levin. Yes, all of that, but requires huge amounts of capital, big balance sheet, lots of leverage, and lots of risk. Now, Goldman thinks of itself as being the best manager of risk on Wall Street, and they're not wrong. They saw the risks coming in the mortgage market and uniquely did something about it. Everybody else didn't see the risks and let it take them down. Goldman saw something about it, saw the risks, and did something about it, but at the same time, they created huge conflicts for themselves. Now, the other tenet of their philosophy is they believe they're great at managing conflicts, whether with their clients or internally or whatever it is. We're in the business of managing conflicts. There are lots of conflicts, and we're in the business of managing them. Well, I think that's gotten them into a lot of trouble. And you can see, as I write in the book, during this crisis, yes, they were very smart about seeing trouble coming in the mortgage market and then making a big proprietary bet against the mortgage market. Check for Goldman. Very smart move, and it made them billions of dollars while it cost everybody else billions of dollars. But they didn't stop underwriting the mortgage-backed securities that were causing the problems. Why? Because they saw a way to continue to make money for another 6 months. So they kept doing that. To me, that's an inherent conflict that is unmanageable. That cannot be managed. And Goldman has proven itself unable to manage that conflict, despite what they may have told Senator Levin. At the same time, now this is a very subtle point that even Senator Levin didn't get into, but the Financial Crisis Inquiry Commission did, and if people read that report, they will see this described, is the effect that Goldman's marks, the marks on the securities that it had in the market, its marks were lower than every other firm. In other words, instead of saying these securities were trading at 100 cents or 98 cents, Goldman had them trading at 50 or 60 cents at the same time that they had this big short on from which they would benefit from lower marks. And those marks got translated into the market because these are not stocks that are traded on an exchange where, the differences in price are 1/16th of a dollar or 1/16th of a penny or whatever it is. These are lightly traded securities that rarely trade, don't trade on an exchange, trade by appointment. So if Goldman says they're worth 50 cents and Merrill Lynch says they're worth 95 cents, then they have a debate. But eventually, the rest of the market had to admit that Goldman was right about these marks. So Goldman had this big short on, lowered their marks, made a ton of money, and then it had the effect, as I describe in the Bear book and in this book, of putting Bear Stearns out of business, putting AIG out of business. There are lots of other reasons. They would have gone out of business anyway, but as I say, they exacerbated the decline of all of their competitors. So if you can imagine, Goldman put on this trade in the December of 2006 time period that made them billions of dollars. At the same time, it put all their counterparties and competitors out of business. I mean, I'm sure they didn't start out doing that, but that was the effect that this trade had. Brilliant on the one hand, but ruthless and devastating on another, and cost us, all of us taxpayers, trillions of dollars to rectify.
Well, a number of people have raised problems with this proprietary trading thing, as you're saying. You look back at it and wonder if they wouldn't have been better off just letting that die, letting it collapse in the financial crisis. Have we really resolved this issue as a nation?
This issue is not resolved. The Volcker rule has supposedly made proprietary trading, or some parts of proprietary trading, unlawful now. But Goldman makes the argument that that was actually only a really small part of our business. Now, in truth, the guys who came up with this idea for the bet against the mortgage market, this proprietary trade, in 2006 was 3 or 4 guys on the mortgage desk. So,
and they seem to borrow heavily from the famous Paulson hedge fund.
Yes, he was their client, and at one point they were executing trades for him as an intermediary, and then they copied him and basically didn't want to trade with him anymore because they wanted to put the same trade on themselves. So there's an example of, taking their client's good idea. There's no market for good ideas. I mean, the market for good ideas is available to everybody, but they obviously were aware, because this was a proprietary idea that their client had, John Paulson, and they copied it. They decided it was a good idea, and then all of a sudden he wasn't such a good client of theirs anymore because they didn't want to do that trade for him anymore. They wanted to do it for themselves. So, this is so complex. I mean, it raises so many important moral and ethical questions about behavior and about what's important and what we value as a society. I mean, if this behavior isn't illegal, maybe it should be illegal, and that's probably what Senator Levin is getting at. And when he issued his report last week and referred the matter supposedly to the Justice Department for investigation, I think this is what bothers him. And I've talked to Senator Levin about this, and I know that he is extremely troubled about this. And yes, he did make a bit of a show last April of Goldman and Goldman's team, but I think he is onto something quite real and that remains desperately unresolved and needs to get resolved before we can figure out about what we want Wall Street to do. We want Wall Street to serve us. We don't want it to serve itself. Yes, it can do well by doing well for us, i.e. raising capital for the rest of the country and the world, that allows companies to create new jobs and build new plant and equipment, or provide M&A advice on deals or investment advice to people who want that. Those are services we can live with, more like a utility, if you will. We can live with those services. But when it acts like a casino and starts making huge proprietary bets for its own account, one way or the other, which is what was happening during this crisis and was probably still happening, that is not good. And that's the debate we need to have. But unfortunately, that's not the debate we have had.
No, and it seems it's quite unresolved, and the taxpayers are still very miffed about having bailed out firms that were in the midst of doing that, not for the good of the country in any way. So, well, thank you very much, William Cohen, for your wonderful book, and it makes me even more interested than I started out just talking with you about it.
My
And
pleasure. Thank you for having me.
the best of luck to you, too.
Thank you.
Around the ears, just like the rest of us, by the financial markets and the economy, although they do definitely seem to have landed on their feet better than an awful lot of the rest of us and most other Wall Street firms. So perhaps that's what you mean. But I wasn't sure, I wasn't convinced that you believe Goldman Sachs rules the world. I mean, I think you must, I sense that you realize that there's weakness there too.
Well, first of all, you know, subtitles of books are created for many different reasons. It is catchy, and I think there is certainly a narrative in there about how, I mean, certainly Goldman Sachs has had the reputation of being very powerful and the envy of every other firm on Wall Street. I worked on Wall Street for 17 years, and no matter which firm I worked at, we all envied Goldman Sachs. We wanted to be like Goldman Sachs, even though I worked at a bunch of different firms, some of which were like Goldman, some of which were not like Goldman. They all wanted to be like Goldman because they make so much money. They have this.
Thought was an outstanding portrait of him in the book. Henry Paulson, boy, there's a lot of stuff in there that I'm sure people would be amazed to hear about, the former Treasury Secretary and Chairman. I guess one thing, though, I would say, the book sort of, I don't know whether this is a catchy phrase to try to get people to buy the book or what, but how Goldman Sachs came to rule the world. I'm not really convinced of that thesis after reading the book. What strikes me is the world came to rule Goldman Sachs in a lot of ways, and they almost brought Goldman Sachs down at various times. I think that you mentioned during the panic of 1907, they had troubles. They had troubles, serious troubles in the Great Depression. They had their Penn Central bankruptcy to contend with, which almost brought them down, as I understand it. They had serious troubles in 1994 when interest rates went up precipitously. So it seemed to me that once you get into your history of Goldman, you find that Goldman's been battered in the very complicated financial instruments. So what I wanted to ask, it's a rather long book, up to 600 pages, and enjoyable reading for me, but I was thinking about sort of the average guy who likes to watch, you know, the basketball game on the weekends or whatever. Why would he want to read this very detailed book on Goldman Sachs?
Well, you know, the thing is, if you want to understand the way I think the world today really works, which is the intersection between Washington and Wall Street, and how power flows back and forth between those two, and the way sort of 20th century and early 21st century America evolved in this country, and around the world, and the influence that Wall Street had both on this country and around the world. It's really one of our, you know, great success stories. Wall Street, American success stories, is Wall Street. We've become sort of the leading, you know, maker of and providing access to people with capital all around the world, and this is one of our leading exports. So if you want to truly understand how all that worked, you have to understand Goldman Sachs, because Goldman Sachs has been at the nexus between power in Washington and Wall Street for, you know, 100+ years. The firm's 142 years, giving them the benefit of the doubt. You know, they've been very powerful for around 100 years. And so this tells the story of how they got so powerful and the kind of power that they have and influence that they have, and how this black box that is Goldman Sachs, that for many people is very mysterious, and you know, now is sort of the object of so much scorn, and it really sort of peels back the onion, you know, on what Wall Street and Goldman Sachs is all about. And I think it's done, I hope it's done in a very sort of readable narrative that will engage readers with characters that sort of come to life as they make their way, you know, through the firm.
Yes, it certainly does, and there's some real highlights with one of the original partners in Goldman Sachs, Sidney Weinberg. I thought, Mr. Cohen, thank you for coming for this interview.
Thank you for having me.
And this is a man who works and lives in New York, works on Wall Street, and is very steeped in the world of Wall Street, knows what he's talking about. He's written a book, Money and Power, and How Goldman Sachs Came to Rule the World. Extremely well written and readable, extremely well researched, with more than 100 interviews with the top chairman and CEOs, 6 of the top chairman and living top chairman and CEOs of Goldman Sachs, plus many of the sort of lower players, but still important people in that world. And it's a very serious book. This is not your Hollywood version of Wall Street, although there are elements of intrigue that could form a plot for Hollywood. Basically, you're going to get all of your details and some of the drier stuff that you have to learn to understand what Wall Street does nowadays.